The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Big news today. I guess the yen made a new all-time high. Let's go figure. Not a unique occurrence lately, and Japanese definitely admitted that they're going to kind of lay off the tax situation and not raise taxes anytime soon. Hit an all-time high and then kind of backed off. So let's take a look at that. Don't have a lot of economic news to report. Many times some earth-shattering events are going to come out today. So let's just get right into it. Here's the Nikkei situation on the daily. We may have a new profile appearing again here soon, but as you can see, we kind of poked our head up and then kind of backed off. It's kind of bearish, actually. Here's the weekly situation on the Nikkei right now. If I can get this up, 16,455, big time support. I don't see that coming anywhere close to that number anytime soon. Here's the 240, and this is kind of the reason that I'm thinking we may have some kind of technical damage and may back off just a tad here. 17,213 was the short-term first time, break of 240s since. I just want to kind of. We're not pulling data that far back. I'll look at that in a second. First time I've seen that in a while, actually. So 17,213 is going to be short-term resistance. This is what we kind of did already on the Nikkei. And if you guys aren't looking around at different products to trade, this is kind of my take on, getting glued in and constantly trading the same product. You start seeing things that really aren't there, and you start getting impatient, and you start making moves on lower probability setups. And that's why I like to kind of look around, use our scanner, and just kind of, use that to kind of pick out things that are in my wheelhouse as far as inflection points and whether we're above or below profiles in strong or weak markets, drill down into the charts, and then, maybe make a more higher probability decision instead of just gluing in on the S&Ps all the time, for instance. So, and again, you make a lot of money trading one product and really getting familiar with that one product. But, the way I've kind of broken stride from the insanity of looking at one product is just to look around and, use the scanner and try to figure out where the landscape is on quite a few products. So Nikkei short term, we kind of got below the 240, came back and touched it. Those are those powerful trades on any time frame. 17,213. We're trading a little bit lower now, 17,105. So again, I expect this to kind of edge off just a tad. And why do I think that? Just that classic kind of go and make new highs and kind of back off really quick. That's just kind of a hint in itself. And let's take a look at the yen. No mystery here. Similar situation, and the yen didn't want to stay above those unfair highs. And as we cross back below, and this is why I'm kind of thinking that the Nikkei may kind of pull back a little bit. The yen, the leverage point here now, 115.59. We're trading 115.12 right now, but we've been a long ways. We've got a new profile. We may explore the entire auction. Again, this affects the Nikkei. Forget all the stuff that's going on fundamentally with all the news announcements in Japan lately. Technically, I'm not uncomfortable looking at this as a leverage point resistance to try to trade against the long-term trend down just a little bit here. We've come a long ways. I like the action, the classical action at the top here, and I'm sure Steve Rhodes and Basil and the rest of the crew on TFNN will probably have some good thoughts about the yen in general, and they may coincide with what I'm saying here, and they may actually put some more sanity to that equation either way. So, that's my take on it. Something else that kind of relates to the yen and relates to some of these currencies that we follow. I just want to mention, I talked to Paul Familiarin in Hong Kong this morning. He's a friend of mine. He's from the Philippines. He kind of runs some of the Asia FXCM operations. FXCMs, if you don't know what they are, they're a huge Forex dealer, and they've kind of gotten, a lot of Forex shops from the past. I mean, it was kind of, widen the spread, and, we hope you make money at some point. So, but I kind of admire the route they've gone. I think they kind of pulled it together as far as kind of getting into the realm of fairness, if you will, from a Forex dealer standpoint. And Paul, I was talking to him this morning. He was in China on a business trip, and we have some Russian situations that want to be kind of converted into Hong Kong dollars and some other things. Some of the folks that we know in Russia are just trying to, get currency changed over. So I was talking to him about that, and I said, well, Paul, how's you guys got to be doing great as far as transactions go right now, because the yen's going up. We've been pretty right on that. The euro's going down. The British pound's going down. Australian dollar's starting to trail off a little bit here, just with a little bit of noise. And a lot of the customers that we have at FXCM, I mean, they listen to us, and I mean, we've gotten some great comments back on some of the things we've been talking about over the past couple of months. And he said, John, he goes, man, things have been terrible. I was like, what are you talking about? He goes, some of the people, like for instance in the euro, have taken such a bearish stance, in the last couple of months. They haven't gotten out of these trades. There's been no, people buying and selling, or selling and buying in this case. And same as the yen. I mean, there's a lot of advisors who have kind of advised the long-term stance either way. And he goes, man, our transaction volume has just been incredibly bad. I was like, wow, that does make sense. But I never really thought that people were kind of leaning on these things as long-term positions, and not actually trading, around some of the shorter-term inflection points. So it was interesting to hear him cry about it, actually. But their whole shop in Hong Kong, he said it's just starting to pick up, but he says it's just been terrible as far as transactions go. And as a broker dealer, your life depends on transactions, in case you didn't know that. So I'm sure you knew that, though. Let's take a look at the dollar. Here's the situation on the dollar. Kind of yenish kind of feeling here. Got the 87, 86 unfair highs, kind of poked her head above, close below, sitting there. I'd like to see this come down and explore the entire fair auction around 87 to really kind of get some maximum leverage on the long side. Kind of staying away from this right now. Don't like shorting the dollar, but I'd love to see a pullback into some lower inflection points, and that's kind of the way I'm looking at that. So, we kind of beat the currencies to death yesterday and the day before, so I'm going to stay away from that. Let's just take a look at the S&Ps. We've got our breadth indicator on our scanner starting to, turn a little bit here. We've reached highs yesterday. What were the highs yesterday? 2039. And, that's been a decent trade off the 2019, 2014. But we've come off, and we're starting to see short-term breadth turn a little bit here. There's no mystery. The short-term is kind of mirroring price action a lot of the times. And when I talk about breadth, I'm talking specifically about these numbers. We'll probably be possibly even negative breadth on the 60-minute this morning. But, I look at the daily and the weekly breadth, and that's kind of keeps me looking for, in this case, support as we've been looking at this from October 17th onward. As we were looking at it from the short side from September 19th downward. But, these are, I don't talk too much, I don't talk enough about this, in my opinion, because the power of this is really held within looking at the internals of all the components of the S&P and building, whether stocks are above fair auctions, below fair auctions, or within fair auctions. And this is something really that has been an incredible find for us. So that's the situation. We're also noticing I've got the S&P 500 up. I'm looking at stocks trading below the box here on the daily. Starting to get more instruments trading below the box here. This is our daily grid. This is, it's not a plethora of stocks that are starting to look bearish on an intermediate. This is a very low percentage, in fact. But, starting to see this creep up. So, we may go back and retest to 2014, 2019. If we break there, we could see lower numbers on the index itself. But the guiding factors, looking at the 240s, we've kind of broken below 2029. And, we're kind of in that kind of no man's land between that 2019, 2014 DMZ and 2029 now. So I don't know if there's some, some good trades to leverage against on the very short term. 2029 will be a lid and a reference point with stops above, in my opinion, if you're going to short this down into that 2014, 2019 area. But again, the long-term trend is up by definition, technically speaking, and breadth speaking. So, you're kind of playing with fire a little bit there right now. Don't have a ton of confirmation to really start having conviction on that level. Let's take a look at the NASDAQ. Looking over the DIN, TLT, I haven't really traded that since it was called the Lehman 20-year. I'm going to take a look at that. Here's the NASDAQ. This thing scares the mess out of me all the time. It's just a strong index, and basically not coming off that much here. 41.76. So we're going to take a look at the breadth on the NASDAQ. I'm going to pull this up wherever we are. Okay, here we go. And I'm going to use my drop-down menu here, and there's so much going on behind the scenes to create this, guys. I can't tell you the amount of server resources. Michael's over here laughing of how much we pay Amazon Web Services every month to crunch all these numbers on their servers with like 16 core. What is it, 16 core each server now? Yeah. With the maximum amount of RAM, and it uses it all on multiple servers. So it's, please benefit from that. Here's the situation on the NASDAQ. Breadth got the short term starting to turn negative. But again, until I see the 240s turn negative, it's not even worth looking at too much from the short side. And if I want to look at the NASDAQ 100, I'm going to clear this out, the S&Ps. I'm going to pull up the NASDAQ. This is such a useful tool to me. And we're actually releasing this today on TFNN. So you should see some commercials. Here's the NASDAQ, and here's the daily below the box. And wow, we've got 1, 2, 3, 4, 5, 6, 7 stocks trading below profiles on the daily. And the really weak stocks, obviously, are TripAdvisor, Open Joint Stock Company, Discovery Communications, Comcast, Charter Communications been up there forever. Facebook, it's kind of identified here. Not probably the best buy seen yet. And weekly inflection points right now on Facebook, bottom of the box, 73. So as we go to break here, we're going to bring Eric back on. We're going to talk a little bit about this Chinese situation, a couple of fundamental things. Me and him are going to kick around. We're going to look at some Chinese stocks. And we're going to come back and take a look at gold really quick, because I've got some thoughts on gold in general, and they're not that good. We will be right back after this break, and Eric Courtney will be with us from New York. I call him the mayor of Wall Street. Hope you guys enjoy him.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Got a little bit of an echo. Al. Hello. Testing. Bad echo. That's okay. We'll get through it. Just wanted Oda in the room, in the den, if it's okay with you. I pulled up TLT. I like what you're saying about it, keeping the tight stop. There's the weekly. Here's the daily. Kind of got a little DMZ between 119.13 on the daily and the unfair highs 118.04. That's kind of Custer's last stance, in my opinion. And I love the concept of tighter stops on this. You can always get back in the game on the long side if you're looking at TLT from the long side. And you know, the kind of the note situation in general, the 10-year. I've been a fan of getting long this thing. We've kind of gotten back above weekly unfair highs 126.09. I love it. And the dailies, we kind of had that new box up here. We talked about waiting patiently, leveraging off 126.02. I think you're spot on thinking on the long side, Oda. You know, but hey, we could all be wrong. And stops are always in order. But I love the action on what these 10 years and 30 years and that TLT, which I don't even know what it's called now. It kind of had exited my mind after Lehman blew up there. So I don't know what they call it now. I heard we've got Eric Courtney on. Eric, are you there?
I am here. I'm here.
Awesome. How are you today?
I'm good. A lot of news going on. A lot of exciting things happening. China situation, tariff deal, and the carbon deal is a major, major deal. I mean, that's not a small thing. I mean, yesterday we talked about valuations of companies that are green-leaning or leaning green, and what we're talking about in this deal with carbon is important. But
really
the more important deal is the tariff.
You're talking about that, and the deal gets done today. Let's keep expounding on some interesting stuff there, and I want to keep you on through break. We got about 3 minutes before the first break, and then if you can hang around, we're going to kind of really get into this, I hope.
Okay, you tell me, but I think the tariff deal traders should take a hard look at. It's an immediate deal that affects $1 trillion worth of trade. There's a lot of semiconductor games, all of the technology that, we're talking about, that Sony, Samsung, Qualcomm, all of the PlayStations and those things. China, had a tariff going because they made about 28 billion, 29, they were standing to lose 29 billion of their revenue, dropping the tariff. But it's worked out where they figured out how they could just cut it down to only about a $6 billion loss to them. The government in China, they still play hardball. I heard a story where Xi, I don't know how the hell to pronounce his name, took back on his plane 3,000 pounds of ivory from Africa that he took. And they seem to have it pretty well documented. Ivory is not a good idea. It's killing elephants and all that. So, this is all good news for us to be in good shape with China again on a military basis and every other side of it. But the tariff situation, if you look at some of the stocks that are going to react today, Apple and Microsoft are very happy about that. Do I have you, John?
I
and some of the Chinese
I dropped off for a second there. I'm back. Can you hear me okay?
Yeah, you're fine here.
Okay. What did they actually agree to, and what did we agree to? Do you have any details on that? Because I heard, I didn't kind of.
Yeah. Go ahead.
I heard that they had they kind of agreed to some things around a 2030 date, and we had agreed to reduce. And that was basically to kind of keep par with where they're at now. And we had agreed to reduce by 26% by 2025. Does that sound?
That's correct. But 28% by 2025 reduction of carbon. They agreed to not have any further growth of emissions, of carbon emissions, by the year 2030.
Gotcha.
To me, I'm not going to be around, so, but who knows? Maybe I will. But the bottom line is, I'll be feeding pigeons and smoking camels in Central Park somewhere. But the bottom line is that this is a big step, and a lot of it will have an effect that, the old effect across the board to a lot of companies that are making changes. So that's a big plus.
Right. Okay, Eric, we're gonna hit our first break here. I hate to interrupt you, but can you hang around and then let's kind of plug through some stuff that we talked about earlier. Okay,
let's do that.
Okay, thanks, Eric. Guys, we will be right back. Stay tuned.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Still have Eric. Hello? Eric, you still there?
Yes.
Great.
I'm still here. Got me.
Good. I've got the 30-year up. I just want to kind of get your thoughts on rates for a second because I know we got a lot to talk about. But this kind of proves possibly the theory I've been speaking about. Like the stock market goes up, notes and bonds go sideways. Seemingly, that's the worst thing they can do. Seems like it anyway. And the market starts just ticking down just a tad. I think we're down like 10 S&Ps, 12 S&Ps from all-time highs right now pre-market. And these things have just kind of just bolted. I mean, the 30-year's up a whole handle just because the stock market's down like 10 or 15 S&P points. Where do you think these rates are headed? Hello?
Well, the rates, can you hear me? There's a little bit of static. Am I on? The rates are obviously going to head higher. It's a matter of, it's going to be little pieces here and there. And the news on interest rates is, I think, way overdone. I think the breadth of the market has come down a little bit. But, I mean, the sentiment and the seasonality of the market is very positive. The stocks are going up. And the bond traders, I swear to God, bond traders sometimes, I think they have nothing better to do than to just, play the game. I mean, it's been a boring couple of years for the long bond guys. I'll tell you that. And I know the old days, I mean, they would do trades to do trades. But now, with everything happening so fast, and everyone is a little bit concerned about this Forex situation with the big banks and how they've manipulated, the high-frequency trading is modest compared to what the banks do when they're involved in the trading of the interest rates. And
I'm glad you brought that up. Yeah, I'm glad you brought that up because I had it written down to kind of give my 2 cents about that. I mean, what do you do? Like, there's a guy dumping nuclear waste in the river. He gets fined $100 every time he throws it in there, but he makes $1,000 every time he throws it in there, dumping it in there. Like, I don't even understand the logic. These banks and the financial institutions that gets, this is kind of like a slap on the wrist. They made $1 zillion and they get fined a couple of billion. I mean, it's not right. Maybe the government understands that they can't just throw them under the bus because, they're fearful that, what's that saying? I keep forgetting, too big to fail or whatever. I mean, like, what's your thoughts on the fines and just the activity?
There's a lot of guys who are, they get paid. The way of the payments is still a problem. The way people get paid in the industry is a problem. It's one of the things that caused 2007, 2008. The incentives were wrong. And, guys would go out there. I remember traders hiding tickets in the draw. All of a sudden, bit of bad news out of Singapore. We lost $4 billion in a trade. The guy, nonsense. I mean, the way people are being paid in these big banks, that's part of the problem. They're too big to fail. My God, you're talking hundreds of trillions of dollars of derivatives out there that the marketplace for them is like, 4 or 5% of that amount has a trading market. So guys are, running the show. These traders are very clever. Obviously, you combine that with the computers and the type of technology we have. I don't know how anybody at the top of the heap, the bosses, the guys who are in charge, can even begin to think that they can tell us they understand what's going on. They don't. Right. These things have happened, we have to address this at some point. It used to be the old days, a guy comes in and says, we've got 600 million Deutschmarks. Guy would stand up at Citicorp. He had about 30 traders around him. It's a 600 million selling D-marks for dollars. Guys would raise their hand, 20. Another guy down there, 25, 30. He'd be keeping it on a notepad. And the 600 million would be done. The trade would be done. I mean, these were people, these were guys who had clients. They'd hit a button that say, selling you D-marks, with dollars. And he'd raise his hand, 25, 30, and the guy said 40, 10, 15, 20, 600 million, that trade was done. Now it's all electronic. And the electronics business as well as anybody. So I think that there is room for some serious problems, and I don't believe our regulatory people have a good understanding of it. And too big to fail is back again. I mean, not only too big to fail, but too much money. Citicorp has $600 billion. Apple has $150 billion. We're in crazy land now. But let's get back to the tariff thing with the situation in China. That situation is a plus. Now, I hate to mention the word tariff. It's a type of word that's like, homework. I mean, it's a terrible word. But if you remember 29, the reason for 29, the crash, was tariffs. The reason, people... So China now has opened up quite a bit. I'm sort of surprised the way this whole trip to China worked out in everybody's favor. It's $1 trillion economy in terms of what was tariffed the tariffs were on, all the electronics, the games, the Qualcomms, the Toshibas, the Dell Computers, the Hewlett-Packards, everybody benefits. So traders will start seeing reaction on these things, and I think that's a big positive. I understand your scanner is up there today in terms of being more visible on TFNN, John.
Yeah, we're releasing this today on TFNN. We've been using it for a while ourselves, kind of working a couple of things out on our own, trying to figure out the best way to display. I'm going to cut my camera off, Eric, because the TFNN connections are getting kind of blurry. Maybe you should turn yours off too. I'm just going to kind of cut my camera feed here. And Al, I've alerted Eric to do that. Cool. Yeah, thanks. So we've been working on some different things here to kind of make this a little more quick understand kind of read situation for most folks. These speedometers, as we call them. I'm looking at the NASDAQ speedometers right now, the S&P 500 speedometers. We did have some charts up that we were looking at displaying along with some raw statistical numbers, but these kind of have everything baked in the cake, and it's such a quick, easy kind of read on these things to kind of get an idea. The way I look at them is this, is if the breadth is positive, which means all the internals of the S&P are kind of, in a go-go long mode and not negative, I'm looking for the market to just continue to edge higher. And that's kind of the state we're in right now until we're told differently. So one of the things the scanner does for me is it identifies, kind of the major mindset of the marketplace. And I'm showing it right now on a long-term basis. And then I can kind of do this. I can drill down into my underlying index, S&P 500 in this case. I'm going to pull this up right now. That's okay. I think we lost Eric, but that's okay, Al. I can take it from here. And thanks, Eric, for coming on today. So what I do is literally, as that breadth turned positive, and we had a breadth kind of positive situation on our dailies pop up on the 17th, and I know that wasn't the market bottom, but that's when we got confirmation that, hey, the internals of the market have changed. And then, therefore, what I do is I kind of get into long mode, even though we're in the middle of a big, wide, fair auction on the daily here around the 17th, the 20th, 21. I don't really necessarily want to look at these inflection points here as the greatest thing since sliced bread to start shorting. I'm looking at the most powerful trade of getting above these inflection points, coming back on the retest, and then getting relatively long, getting long in a large way. I don't know what I was saying right there. But being able to kind of, back and fill into a big, long position based on that breadth being positive, and then clearing the fair auction, being outside the data sample set, and just being able to march forward. I personally thought we were going to have some more kind of in this sell-off from the 19th on September, which we actually called breadth negative on the 19th on those speedometer dials. I thought we might have a kind of a retest down here, maybe even some lower action on prices, but breadth changed, turned positive, boom. Just kind of got it out of my head. I mean, just, c'est la vie. As traders, we just can't hang on to, and I've made some mistakes trading before. I've hung on to concepts and got really, really stubborn about some things, and that is just a death knell if you're a trader. And I've learned some lessons. Hopefully I've learned from them, and these are the kind of things when I see these things happening and get the confirmation that, it's okay to be long, not okay to be short. I don't really think that the economy is going to do bad anymore. I don't think that, we're up too high on the S&Ps already. I just kind of throw it to the wind and start looking at this from you got John back or Eric? Eric back.
Hello, John.
Okay. Hey, Eric. Yeah, I was just going through a little bit about the scanner and the breadth. Got a pretty bad echo. Hello? Okay. I've got a very bad echo right now. Let me take my headset off. I'll just make this out a little bit. What I did earlier was I took a look at the NASDAQ NASDAQ and tried to identify some stocks. Hey, Eric, you still there?
I'm here.
Hello? Okay.
Hello, John.
Yeah, I think the echo's gone now. Okay. No, it's back. Hey, Al, Eric, we may need to drop you because I've got such a bad echo, and I think it may be due to you being on here right now. I can't really hear.
Nope.
So I really thank you for coming on, and maybe we can pick this back up again tomorrow. Okay, cool. Sorry, guys. Okay, so what I did is I basically filled up NASDAQ to, kind of showed some stocks that weren't cooperating with this move up because I want to be, in my mind and theoretically, I want to be short stocks that are weak in a strong market because the market does turn around, which, again, the breadth is saying we're probably going to head higher. But these are the least risky candidates in my book to go short. And if you're going to kind of play that relative strength game, I don't think you got a better tool than this. This is crazy good, in my opinion. So let's just kind of pull up the S&P 500, let that load up. And I'm on not the strongest connection in the world here from where we're doing the show today. So I'm going to load that up, and I'm going to take a look at stocks below the box that are on the daily showing some weakness. And I can also see some other time frames that are showing weakness on here. So FSLR, let's take a look at that. FSLR. This kind of cuts through a lot of the crap for me. I mean, like it does a really good job of drilling down quickly into a large one basket or many baskets of stocks. And what you can do with this, as I pull it back up, just to make a footnote to what I'm saying here, you can choose multiple exchanges at the same time and then kind of really find globally what's meeting your criteria by some of the basic filters we have. If you want to find things that are sitting at inflection points, top, bottom, neutral situations, things like that, that maybe you can day trade in between areas, those are the types of things that, different styles of traders want to see different styles of indications. So right now, looking at First Solar, what I did is I pulled up the weekly. I know that's kind of breadth negative, below the profiles that we currently have, 5250. And also on the daily, we've got 5156. So this is a stock that's showing relative weakness, kind of got down below recent all-time lows, and now we're back below profiles. And, to me, if the market turns south, this thing, if it has any beta relativity at all towards the marketplace, theoretically this should fall faster. So, this is the kind of thing that, it identifies things that are basically in the wheelhouse of relative strength trading. And also, as I pull this up, I'm just going to kind of look at some of the usual suspects here that might be on this list right now. I think, Time Warner, TWC, Facebook, Coca-Cola. Let's take a look at Coca-Cola and TWC. Let's look at TWC first. TWC. We're getting ready to go to break here, guys. I'm just going to kind of glance at this. Here's the situation. The weekly, we finally got back down below. God, I didn't mean to hit that. And the leverage point here is 136.74. You can see that it's not cooperating with the marketplace. The daily, we actually had to cross over a lot sooner. But now we've got that weekly kind of sitting there as resistance, unfair lows, and if you're short, you got to love that. So we'll be right back in a couple of minutes, and we'll kind of get the show closed up here with some re-looks at some of the things going on before the market opens on the index scene. Thanks very much, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. We've got about 4 minutes left here and had the scanner up, and we're just kind of picking out some easy things on the dartboard here. First solar we looked at. L3 Communications is kind of sitting right there. Motorola, MSI. Kind of talked about Coke, but the reason I'm looking at Coke is I like it when we're right at the inflection points because I can immediately get my Jones off, put some trades on here. Bottom 16. What does that mean? That means that if I did a filter showing what's below the box bottom, and it's also showing bottom. What I can do is going here, and I'm going to Coke, and I'm going to look at the daily here, which is what I was predicating that on. And I've got unfair lows at 42.57. We're right there in the vicinity of that bottom. And, there's a leverage point there. I don't necessarily love the action here. Coke kind of went into this inflection point, backed off, kind of gone back into it, poked its head up already, got back below. This, for a lot of folks, this could look like a kind of a consolidation pattern to move higher. The good news is, if you're going to use these leverage points, and they have worked out, some decent little day trades or mild pullbacks with the market skying, you've got a relativity situation on your hands where you've got a weak stock in a strong market. You're still below profiles, not wanting to close above. You can take a shot here, and the good news is you know where to put the stops. Because if we get into this fair auction and start closing in here, we're probably going to start exploring more, and that's just the way that goes. But the genesis of this thought process really stemmed from looking at this and just doing a filter. Now, if I come in here and I say, well, you know what, that was cool. Let's look at, let's kill this, and that doesn't get us back to normal. Here we go. Let's load the S&P 500 again, and we're going to hopefully get this up in a second here. Okay, so we got all the S&P 500 stocks on our grid again, and we're going to come in here and try to do a little filtering work. Let's go to the daily again just to make it simple, and let's see things that are sitting at the bottom of the box. Boom. Wow. Okay. Here we go. So tells me things that are sitting right at the lower part of the fair auction on the daily, and I have another stock here, Seagate, which is dual inflection point, dual time frame lining up. So let's just take a look at that. STX, top of the box, bottom of the box. What does that mean? We'll kind of get into it. Let's kind of pull up STX here. And it's really nice to have something that kind of picks these things out. All right, so here we go. $61 stock, sitting right below their weekly unfair highs. Kind of made these new all-time highs and backed off. We want to look at the stock market in general too. This is a tech kind of heavy. Seagate Technologies, you make hard drives and things like that. But that inflection point on the weekly is lining up with the lower inflection point on the daily. So what I'm kind of looking at here, and this is a trading opportunity kind of defined in my opinion. You've got a pretty strong stock. You've got a pretty strong market, but you've got some leverage points here, 61, 64, and what you can do also is kind of use some of the other techniques that you have to figure out, is this a decent short candidate? Should I wait a little bit longer for conviction? Put stops oriented around that dual inflection point area, and then kind of see what's going to happen on the breathing side. We're kind of going to break here now. So I'd like to pick this back up again tomorrow and kind of a little bit more clearly define what the mode here is for this type of trade. Guys, have a good day trading. Steve Rhodes is up next with the Trader's Edge, and stick around for that. You'll enjoy the heck out of it. Thanks, Eric, for coming on. We'll pick it back up again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.